Today is 5th February 2026. This is Daily Nifty Market Structure Report. In this video, we are not discussing predictions, we are not discussing trades, we are not discussing direction. This video is only about how the market behaved today based on price, participation and positioning. The closing price is used only as a reference point, not as a signal. Market snapshot. Nifty closed near 25,642. The index spent most of the session inside a narrow price range. There was no large directional expansion in price. Despite steadily rising participation through the day, this difference between price behavior and activity is the most important feature of today's session. Price versus activity. Throughout the session, trading activity kept increasing, price movement remained limited. This tells us one simple thing. Trades were happening, but price was being absorbed. High activity without strong price response usually reflects positioning management, not urgency. Cash market behavior. Cash market turnover crossed 1.14 lakh crore. Participation in the cash market remained steady and orderly. There was no sudden rush. There was no late day panic. Cash flow indicate continued engagement, not emotional behavior. Derivatives composition. Derivatives activity remained the dominant driver. Index options volume crossed 5.3 crore contracts. Despite very high volume, positions were adjusted, not aggressively expanded. This shows structured participation, not speculative imbalance. Futures open interest check. Index futures open interest stayed flat to slightly lower. This matters. It shows that futures were not used for leverage expansion. Futures participation remained supportive, not controlling. Option structure call side. On the call side, large open interest remained at 25,700, 25,800, 26,000. Call prices declined through the session. Call implied volatility stayed stable. Call open interest showed mixed changes with some late session trimming. This indicates call sellers remained active, upside activity was being absorbed, no sign of forced adjustment. On the put side, put prices moved up gradually, put open interest reduced across many strikes. There was no aggressive creation of new put positions. This reflects unwinding of earlier protection, absence of stress, no panic hedging. Volatility check. Volatility remained elevated but stable. There was no volatility spike despite heavy participation. This confirms that risk perception stayed controlled. Open interest distribution. Open interest remained spread across strikes. It was not narrowly concentrated. This kind of distribution usually supports orderly absorption of activity. Behavior checklist. Ask these 5 questions. Is price moving less than activity? Yes. Are call and put both are active? Yes. Is volatility stable or falling? Yes. Is futures open interest flat or down? Yes. Is open interest spread not concentrated? Yes. When all 5 answers are yes, the market structure is usually controlled. Final structure state. Putting everything together, participation was high, price movement was limited, call side managed upside activity, put side reduced production, futures remained neutral, volatility stayed stable. This describes a market that is actively traded, structurally balanced, institutionally managed. This concludes today's Nifty market structure report. This explanation is only for understanding market behavior. It does not suggest any action. We will continue to read the market as it behaves, not as we expect it to behave.